Welcome to Realcast, the weekly roundup of the real asset markets. I'm joined this week by Courtney Finger and Nicole Dines. Courtney, let's start with you. Some interesting interviews, I think, this week.
Yes, indeed. I spoke with Ihor Terekhov, who is the mayor of the city of Kharkiv, which is Ukraine's second largest city and is very much on the front line. It's some 40 kilometers from the border with Russia and has withstood, more than a year now of bombardment. The city is still holding strong and managed to maintain autonomy of its territory, but at an enormous cost, both in human life, but also in destruction of the city. So, of course, the mayor is very focused on the current crisis and the war itself, but already thinking to the massive reconstruction needs that the city will have.
It was interesting, I thought, from that, the kind of positive view on, understanding obviously where investors are, but looking forward to welcoming them back, Courtney, as well.
Indeed. I mean, the mayor was pragmatic in saying, look, we understand it's very hard to attract investors to Ukraine at this moment in time, but the time is already now to start thinking about the future needs. And I would argue there are roles that some of the more intrepid investors could play already in dealing with the current crisis and supporting Ukraine in its moment of need. But the moment that the war ends and there will hopefully be peace coming, and then the reconstruction will really start. And that is the real moment for financiers, construction companies, developers, planners, investors, and companies who want to come in and play a role in the recovery of Ukraine.
Yeah, and that's certainly something we'll be picking up on in terms of the CE summit later on in June, bringing different mayors and different cities together to be able to talk about the region and look at the really positives in terms of the investment side there. And some other really interesting interviews coming up in Real FDI as well, the new section in Insight in the next issue. So it'll be interesting to pick up on some of those, like Riga. Really interesting what's happening there in terms of the Baltic Rim, especially. I also did an interview with Perty van Harnen, MD for Europe at Cromwell Property Group. And interestingly, he was talking about, obviously, their focus around ESG, but also an interesting phrase, which was, will we be starting to look at how much embodied carbon we have under management as opposed to assets under management, which I thought was interesting. Nicole, what have you been tracking?
Yes, Real Asset Media had a briefing in person in the Shard, which was a wonderful setting, in Greenberg Traurig's offices in London. And there was consensus among our experts that the German market clearly has been in a wait-and-see mode for a while. Transactions have ground to a halt. It started last year, and the year 2023 has really started very sluggishly indeed. But there was consensus that it's sort of poised to spring back into action, that the market should recover towards the end of the year. There was some of our experts thought it was 3 to 6 months, others 6 to 9 months, but there seems to be, as I was saying, consensus that investment activity will pick up again. It depends what happens, obviously, in the economy. Sentiment has improved. Obviously, they had to deal with inflation. They had to deal with higher interest rates. But it seems that Germany will avoid recession this year. And so sentiment is improving somewhat. But one issue, Oliver Kummerfeldt of Schroders Capital emphasized that there's still a feeling, the ECB has made it quite clear that there will be more interest rate hikes. So as long as interest rates have not reached their peak, then the market will not recover fully. So investors are very much sitting and waiting for prices to go down. But valuations are very difficult. Kummerfeldt and the others agreed, because there's no transaction activity, so there's nothing to look at. So valuers are not quite stuck. They're not quite sure how to value assets. But activity, as I said, will resume before the end of the year. And also, as Florian Rosch of Greenberg Traurig said, they're already seeing restructurings and people coming under pressure, which should open up opportunities. And there are a lot of investors, he said, US and Asian investors as well, that are sort of sector agnostic at the moment. They just want a good deal. So they're basically waiting for the market to settle, for prices to come down, and then activity will start again. So at the end of the year, Germany should be a very different place. As far as sectors goes, they said that living sectors are doing pretty well. They've been the most resilient to the crisis. There's optimism on offices because people are pretty much, over 90% back to the office in Germany. And logistics is still very much in demand. Logistic assets still very much in demand. So, a pretty sort of stall at the moment, but a pretty positive picture for the months ahead, or certainly towards the end of the year. There are also some really interesting news on ESG, my favorite subject this week. Lots of really interesting research. Savills have done a research in which cities attract clean tech and climate tech companies. These are the most important and fastest growing sectors, to combat climate change. So there are lots of startups in the sector, and Savills looked at where are they going and why. Obviously, funding is the lifeblood of all startups, so the availability of finance is a crucial factor, but not the only one, Savills said. He said it was a virtuous clustering of different factors which make a city attractive. And he gave the example of Boston, which is number one in both rankings, the climate tech and the clean tech, because of a strong business environment, availability of finance, but also very, what they call the green buzz, and sort of really a focus on wellness and, making cities a good place to live. San Francisco is number 2 and London is number 3. The other element that's very important in this equation is universities, both for their research and development component, but also as pools of talent, which obviously these startups very much need. And in one of the key examples given was Cambridge, because it doesn't have to be a big city. It can be a smaller city, and Cambridge was seen as a shining example of a model of what they call the triple helix. It's got corporate, government, and educational benefit. Another really interesting piece of research was for Intrel, which looked into something that not many people, in fact, no one has looked at really in depth, which is how funds are performing. And after doing this performance analysis on dozens of funds in Europe, it said the Article 8 funds, contrary to expectations, the ones that promote environmental and social characteristics, start earning positive returns earlier than Article 6 funds, which are the ones that don't have to integrate any sustainability concerns in their investment process. So that says it's completely against their expectations when they did this research, but that's what the analysis shows. It concludes that basically sustainability requirements do not lead to higher costs or have an adverse impact on performance. It's very early days because obviously there are not many Article 8 or Article 9 funds yet. So it's work in progress and more analysis need to be done to establish these facts. It's a very new field, but it's very promising what they found so far. And my favorite story of the week is Partners Group, which is a global private markets firm, has signed a 13-year agreement with Climeworks, which is a Swiss provider of carbon dioxide removal by direct air capture. So Climeworks will remove over 7,000 metric tons of carbon dioxide from the atmosphere on Partner Group's behalf and will be stored underground. Partners Group said it's doing this because it wants to send a strong signal to other financial sector firms that they should do more to clean up the environment. And the Climeworks is a really interesting company because it operates the largest direct air capture facility, a huge place in the world in Iceland. What it does is it captures CO2 in the air, it mixes it with water, it pumps it underground, where it reacts with rock formations and basically mineralizes. So it's a totally natural process that the company just accelerates. And basically it turns the CO2 into stone, removing it from the atmosphere for thousands of years. How cool is that?
No, that's great. Really interesting to see some of these new innovations coming through, I think. I also thought it was interesting at the Germany briefing as well, Markus Biron of Berlin HIP talking about, on the ESG side, particularly transformation loans, but also very much that, it's not so much that there's a green premium, but it's very much, a focus on brown discount now and what that's going to mean. But also the focus on offices. I noticed in the news that Bloomberg Intelligence had a report out just suggesting that prime offices in London, Paris may be acutely affected by the move towards remote working. But interestingly, Marcus was saying that in Germany, there may be a change in terms of the space, but actually that people aren't necessarily looking for less space. So I thought that was interesting to see. Thank you, Nicole. Thank you, Courtney. Thank you for joining us and look forward to seeing you next week for our regular roundup of the real asset markets.